Hello traders, and welcome to a new 5-minute alpha where I am going to be giving you guys as much alpha as possible in 5 minutes on a new tool, new platform, new strategy. This is Buffer Finance. I have not talked with the team at Buffer Finance yet, but I have been really impressed by their platform. And there's a lot of really cool things that I want to show you. Using it's quite easy. It's just Arbitrum, and you just connect your MetaMask, so that's not that tough. And the product that you're using here are digital options. These are pretty cool. So what essentially a digital option is it's like a binary option, except it actually can make you money, unlike binary options. And what you're going to do is you see all these strike prices here. Essentially what this means is that if I buy with, like, let's say 20 USDC, I need in 13 hours for price to be above 66,500. And if it is, I get a nice payout, as you can see right there, my profit. You can do these for multiple strikes. You can do these also for multiple assets as well. You know, BNB might be a good one as well. So there's a lot of different things that you can do. Now, the reason why digital options can be so nice are a lot of reasons. One is that they allow you to bet on low volatility without having volatility risk. So what I mean by that is if you buy an in-the-money option, like let's say you buy the 1.95, which essentially means that you're betting on price expiring below 1.95. And if it does, you make a profit. Not a large one, but you make a profit. And if it settles above, then you would lose your stake. Now, the reason why this can be so good is this is pretty much like shorting a call. When you short a call, which is an options play, you're betting on low volatility and you're betting on price going sideways or down. If price were to rise and then still settle below here, you would still make money. That is not the case for shorting a call. When you short a call contract, what can happen is you can be liquidated during the life of that option. So if price were to go up on this coin of Optimism, OP, and then were to come back down, you might actually lose your money shorting a call option, but you would make money as long as price settles below 1.95. That's one of the features that makes buying in the money options just so profitable for digital options. So far I have taken a few trades and most of them have gone quite well because there's just so many different things that you could do with this kind of information. As well, you could also look at price structure and bet on price being above or below any given price. Liquidity wise, it's pretty good. If I wanted to bet on price being below, let's say 65,500, then the liquidity is actually not terrible. As you can see here, I could get up to 207. So I could get up to this much just for that. And also the liquidity here might refresh. If I were to buy, like, let's say above 65,500, I could buy up to $770 worth and, you know, have about a $1,000 payout, which would be quite extreme, but also quite nice. So there's a lot of really cool things that you can do. And what I want to do in this video is to actually take a trade, you know, based on one of these. So Solana looks good. 160 is the strike price, and it expires in 12 hours and 57 minutes. You can also select different strike prices, expiration times if you so desire as well. So I could pick one in 2 days. I could pick one in 1 day. I could pick one in, you know, whatever amount of time that I want. 160 does seem decent, you know, betting on price being above 160 doesn't seem like a bad idea. I think Ethereum, though, should be good. Let me see on Ethereum. I could do one for Ethereum that expires in, 2 days. And I could bet on price being in between these two strike prices. I feel like that could be a play I could make. Or at least price being below 2,800. Yeah, there's a lot of different plays I could make here. So let's say that I want to bet that price is going to be between 2,600 and 2,800. Let me actually just go do that trade right now. So what I'm going to do is I'm going to bet, let's do $15, that price is going to be above 2,600. And then I'm also, after that goes through, looks like that was actually, I bet 15 ARB. You can bet ARB or USDC. And I'm also going to bet 15 ARB, the price will be below 2,800. So when that goes through, you can see that both trade orders did go through with 15 ARB in each position. Currently, the play that I just made, guys, was a play that bet on price being above 2,600 and below 2,800, as you can see right there. Very easy. The fees really aren't that bad, as you can see here. Now, this one expires in the countdown of 2 days and 12 hours. If price is in between these two that I have selected, which it probably will be, then I will make a profit on both. And you can also see the live probability as well. Now with this, guys, I don't want to reveal the biggest alpha of this right here because that is what I reserve for my Discord. So I have given a little bit tidbits of alpha, but the true alpha, the better trading strategies are going to be found in the Discord if you want to just come check it out. So with that, that's going to be it for Buffer Finance. Really, really cool tool. So many things you can do, you know, multiple expiration times. You could use multiple assets and just a lot of different new things that you can do that you typically can't do with futures trading, spot trading, or vanilla options trading. So this really is in a league of its own. And I really do think that it's worth your time, and you can probably make some money on this as well. Last thing I want to say, if you think that people are going to lose money on this, there's another thing you can do. If you think that for some reason that people are going to lose money on digital options trading, which is what you were just looking at, there is something right here. So you can actually provide liquidity. And if you want to provide liquidity, I believe you hit LP rewards. Yep, this is the right way to do it. So if you do LP rewards, essentially what you're doing is you are providing liquidity. So you can see this is the total value locked in the liquidity pool. And you want this to go up essentially because this is the liquidity pool price. So if you buy and this goes up, then that means that traders are losing money and that you're making money. Additionally, if you think that this is a good idea and that traders using digital options are going to lose money, then you could go down here to boost the yield by locking it up for a certain amount of time. Like let's say 7 days, you would very simply do that, you know, and then you would get in there, lock it up, and it would be very, very simple. You would just have to deposit, as you can see here, deposit some USDC. After you deposit USDC, you would then lock it up. And, you know, the farther out the lock, you can see the more bonus you get here. But again, if traders do make money by doing this, you will lose money. But if traders lose money doing digital options, you will make money on this. And you will also earn the trading fees too. So that's going to do it for today's video. You have everything you need to be successful on Buffer Finance. But if you do want those higher alpha strategies that aren't just the simple ones, you can join the Discord and see them in there. Happy trading, everyone, and go make some money.